Good evening and thank you for joining us on India Business Hour. I'm Parikshit Luthra and here are the headlines we are tracking at this hour. 13 states barred from accessing power exchanges due to non-payment of dues. More than 5,000 crore rupees. These include Maharashtra, Tamil Nadu, Karnataka, Telangana, Andhra Pradesh, Madhya Pradesh, Bihar, Rajasthan among others. Shares of Indian Energy Exchange decline in trade. RBI strikes a note of caution on the privatization of public sector banks in its monthly bulletin. Says PSU banks have done better on financial inclusion, labour cost efficiency and help counter cyclical policy actions to gain traction. Backs the gradual approach to privatization adopted by the government. Stock markets extend the winning streak to the 8th day after a late recovery, but the rupee weakens and 10-year bond prices decline. The dollar index gains strength after the minutes of the US Federal Reserve's meeting points to another 75 basis point rate hike. As crude prices trade near 6-month lows, government likely to cut the windfall gains tax on oil companies during the fortnightly review. Sources say export duty on diesel also likely to be reduced.
We think there's going to be 100 million people that join the formal digital economy in India in the next couple of years.
The Global CEO of Mastercard is bullish on India, says it can become the largest digital economy in the world. Also adds that Mastercard is a payment technology company and not a card company. That's an exclusive. Fintech unicorn Razorpay forays into offline payments, acquires Ezetap, a universal payments platform, in a deal worth more than 1,200 crore rupees. The chairman of the Competition Commission, Ashok Kumar Gupta, promises faster clearances after the proposed changes to the competition law. Also adds that search and seizure powers were already available and there are no additions in the amendments. Also warns that furnishing wrong information will invite penalties. Delhi High Court maintains a stay on Consumer Protection Authority's order barring restaurants from imposing service charge, allows more time to restaurants to file their reply. Court also observes that restaurants are bound by law to pay their employees and cannot make customers liable for it. Also on the show, the union government may have hiked the minimum support price for 14 kharif crops, but soya bean farmers in Maharashtra's Vidarbha say the new prices only cover production cost that prevailed 3 years ago. A special report coming up. Let's start with the day's market action, where the bulls managed to maintain the winning momentum. Stock markets opened in the red after the minutes of the last US Fed meeting hinted at another 75 basis point rate hike, but Sensex and Nifty managed to erase the losses towards the end of the day to end in the green for the 8th straight session. Financial stocks led the charge. With the minutes of the US Federal Reserve's meeting indicating another 75 basis point rate hike, the dollar index gathered more strength, and this led to a weakening of the rupee in trade today. 10-year bond prices also dropped and the yields shot up by nearly 1%. Crude oil prices are attempting to recover after hitting the lowest level in the last 6 months. The US crude stockpile fell by 7 million barrels and the fuel consumption data was robust. The outlook for supplies remains tight, with the EU expected to impose drastic cuts to imports from Russia. Top story tonight, 13 states have been barred from accessing power exchanges due to non-payment of dues of more than 5,000 crore rupees. These include Maharashtra, Tamil Nadu, Karnataka, Telangana, Andhra Pradesh, Madhya Pradesh, Bihar, Rajasthan among others. Shares of Indian Energy Exchange decline in trade today. Abhimanyu Sharma has the details.
Well, sources have told CNBC-TV18 that 13 states have been barred from participating in power exchanges. This has happened as per rules framed by the Ministry of Power for non-payment of dues by discoms to gencos. Such instances have happened in the past too. Whenever this has happened, states have cleared their dues in a matter of days. However, this is one of the rare instances when discoms in as many as 13 states are affected. Buy and sell transactions in all products of power market have been restricted for discoms with high dues dues. The move under new LPS rules will be applicable August 19 onwards. The 13 states which are affected are Tamil Nadu, Telangana, Madhya Pradesh, J&K, Manipur, Mizoram, Jharkhand, Bihar, Rajasthan, Andhra Pradesh, Maharashtra, Karnataka and Chhattisgarh. Total pending dues of state discoms to GenCos are rupees 5,085 crores, with Telangana owing over rupees 1,380 crores, Tamil Nadu owing over rupees 926 crores. So clearly, dues which have mounted over the past few months have piled up, and of course, the government order has come into effect. It remains to be seen how early the dues will be cleared, which will again allow discoms to participate in power exchanges.
All right, thank you very much, Abhimanyu Sharma, for joining us. Domestic refiners can expect some relief in taxes. Sources say the government is likely to cut export duty on diesel and windfall gains, tax on crude in the next fortnightly review. The Petroleum Ministry has recommended a reduction in taxes on the back of a fall in global crude prices. This will be the third fortnightly review so far ever since the new taxes came into effect. Bharti Airtel's chairman, Sunil Bharti Mittal, is full of praises for the government's successful conclusion of the 5G spectrum auctions, calling it as ease of doing business at work in its full glory. Mittal said Airtel was given the spectrum allocation letter within hours after the company paid over 8,300 crore rupees towards the dues. There's another settlement of dispute for SpiceJet. The airline and Credit Suisse have withdrawn the litigation from Supreme Court after placing terms of settlement before it. Allowing the request for withdrawal, the Apex Court granted liberty to the parties to approach the Madras High Court for withdrawal of bank guarantees for $5 million deposited in the court. And staying with aviation, air traffic data from July shows passenger traffic was down by over 7% versus June, largely due to the lean monsoon period and hardening airfare affecting leisure travel. As for market share, Indigo topped the list at over 58%, followed by Vistara at over 10%. Air India, SpiceJet and Go First follow close behind at around 8% each, while AirAsia's market share stands at over 4%. Carmaker Maruti Suzuki's Alto K10 debuted in the hatchback segment with a starting price of nearly 4 lakh rupees. I was at the launch event earlier today. Here's a quick look at the new upgraded Alto.
For 20 years, this was one of the most important cars in Maruti Suzuki's India portfolio. Over 43 lakh Alto cars have been sold to date, and for 16 years, till the year 2020, this was the highest selling passenger car in India. Maruti continues to bet very big on the Alto, and this is because they have 68% share of India's hatchback segment. So even though the hatchback segment, the entry-level segment may be shrinking, Maruti still has a big stake there. So they have now launched the Alto K10, which is a completely new car from the ground up. It has an all-new design. It's built on Maruti's 5th generation platform. It comes with a honeycomb grille, and this honeycomb pattern can be seen in the headlamps, on the wheel covers, and on the dashboard as well. On the inside, you get a 7-inch infotainment screen. You get steering-mounted controls, 4 speakers. When it comes to average or fuel efficiency, you would get an efficiency of around 24.3 to 24.9 kilometers a litre. This is what the company claims. It comes in both manual and automatic variants. The starting price is approximately 4 lakhs ex-showroom.
In a big boost to Tata Motors' electric vehicle business, the company has bagged a major order of providing 921 electric buses to Bengaluru. The company will supply, operate and maintain these EV buses for 12 years. Mumbai's public transportation is getting green. Union Transport Minister Nitin Gadkari unveiled India's first electric double-decker AC bus manufactured by Ashok Leyland's EV arm Switch Mobility. The electric double-decker can ferry nearly twice the number of seated passengers as a comparable single-decker bus. The big newsmaker this evening, the global CEO of Mastercard, Michael Miebach, is bullish on India. In fact, he believes India can become the largest digital economy in the world. This optimism is backed by recent data and the enthusiasm with which India has embraced online payments. Sample this: digital payments in India has seen a growth of 160-fold in the last 20 years. India has ranked #1 in real-time digital transactions. According to a study by BCG and PhonePe, India's digital payments market is currently worth $3 trillion. It is expected to grow at more than 3-fold and hit $10 trillion in the next 4 years. This exponential growth is possible thanks mainly to three key factors: 460 million Jan Dhan bank accounts that has brought many people into the formal economy, more than 1 billion Aadhaar-based unique identification numbers which enable know your customer rules, and more than 750 million mobile phone users. A testament to this growth is the United Payments interface, which is clocking a growth rate of 200% annually over the last 5 years. UPI is responsible for more than 60% of non-cash transaction volume in FY22. So all this has made the CEO of Mastercard bet big on the India story. He spoke to Shireen Bhan about what he makes of India as a market and Mastercard's plan to bolster growth.
What I see today, particularly through the lens of our business, when we look at the digital economy and how it's growing in India and the growth rates of UPI and so forth, there is technology put to work at scale in unprecedented ways in India. And as a tech company and as a tech geek, I find that hugely exciting. So I'm going to go back and see there's models emerging in India that we should all think about and see what else we can do and how we evolve our business in partnerships with fintechs and other companies that are using this technology here in India.
From your strategy of buy, build, or sort of partner, where does India fit into that strategy currently, and what is it going to mean in terms of future investments?
So let me just say a few things. We're not a credit card company to start with, so let's just...
I think that transition you've been on for the last couple of years.
Let's just baseline on that. So as a payment technology company, we, kind of broadly speaking, what we do, our strategy is be in payments, whatever choice of payments is there. Like India is offering a lot more choice in payments than was there even 5 years ago. So it might have been cards, and now it's UPI, it's account-to-account, it's push payments. You want it, you have it in India. So we want to offer solutions in all those spaces. That's our stated strategy. It's different in different countries, and here in India, certainly there's more choice and better for that. But then that's also the question. So if you have that rapidly rising digital economy with all these different payment choices for people, how do you keep it safe? How do you keep it simple? That's another part of our strategy, where we say every kind of service that makes this simple, address the cyber risks, is your digital identity compromised, all those kind of things we take care of, and we then partner. And that comes to the partnership point. We say on payments, there's a lot of partnerships required, for example, on nascent areas of payments, B2B payments. There's a lot of inefficiency in B2B payments, which we bring solutions to the party. Basic P2P payments, here in India, UPI is an amazing success. We don't really need to partner on that, but the question on cybersecurity and how do you make sure that these payments remain safe as this becomes one of the, if not the largest digital economy in the world, that's a partnership area. Then you go into some of the big questions that India is addressing that many other countries will face, and that's the question of an inclusive digital economy. Hundreds of millions of people. We think there's going to be 100 million people that join the formal digital economy in India in the next couple of years.
And you can catch the entire conversation with the CEO of Mastercard at 9:30 p.m. right here on CNBC-TV18. Fintech services platform Razorpay has acquired offline services provider Ezetap for more than 1,200 crore rupees. This marks Razorpay's sixth and biggest acquisition to date. Arundhati Ramnan is here with all the details. Arundhati.
Absolutely, Parikshit. Fintech unicorn Razorpay has been on an acquisition drive and has just announced its foray into the offline payments world via the acquisition of Ezetap, a universal payments platform. Now, the deal, which is worth between 1,200 to 1,600 crore rupees, will see the Ezetap team of 300 join Razorpay but work as an independent business unit. While digital penetration is growing across India, offline payments remains a vital part of the ecosystem. Ezetap provides software for financial technologies, including point-of-sale solutions, billing, loyalty solutions, among others, enabling businesses to accept payments in-store and on delivery. Now, the company currently serves over 500,000 touchpoints, including the likes of Amazon and Big Basket, and works closely with India's largest banks like SBI, HDFC, ICICI Bank, and Axis Bank, among others. Now, the startup also processes over $10 billion in annual transactions on its platform. Commenting on the announcement, Harshil Mathur, the CEO and co-founder of Razorpay, said that the company believes that the businesses of tomorrow will not distinguish between physical and digital channels and will expect a unified payment experience through a single integrated platform. Razorpay believes that Ezetap's tech stack will now further the company's mission towards creating a single unified platform that powers transactions across both brick and mortar and online storefronts. Now, this marks Razorpay's 6th and biggest acquisition till date. With that, it's back to you.
All right. Thank you very much, Arundhati, for reporting on that acquisition for us. The Reserve Bank now has struck a note of caution on the privatization of public sector banks. In its monthly bulletin, the RBI has said that public sector banks have performed better on financial inclusion and labour cost efficiency. Sapna Das joins us with more. Sapna, what is the RBI's stance?
Well, first of all, I would just like to clarify that this is not the RBI stance. This is part of a research article, or rather an article that has been published in their August bulletin. Having said so, however, it is important to note that this article has come out from their own research team at Reserve Bank of India. What does it say primarily? Well, in a strong defense of public sector banks, it says very clearly that a big bank approach to bank privatization may not be the way forward. It sounds a note of caution, and a couple of reasons that they have flagged. Basically, one, public sector banks have played a very important role in financial inclusion, so that means a very important social obligation. Versus their private sector counterparts. Second, also in terms of the monetary policy, how it pans out. Well, private sector banks have been found to be more pro-cyclical, whereas private sector banks have actually helped in the counter-cyclical measures taken by the MPC. So that's very important. That's the second issue. Third, of course, it cites a number of factors, which have helped pull up the balance sheets of PSBs over the last 2 odd years, especially during COVID. And it seems to suggest that going forward, with the setting up of the NARCL, with NAFID also coming into existence, the road ahead is going to be good for most of the public sector banks, and hence it says that there is no need for a big bank privatization. Actually, it's a clear note of caution. So maybe this will be taken note of at some point in time by the political executive. But Parikshit, so far we are aware of the fact that the government has not really moved forward on its bank privatization bill.
All right. Thank you, Sapna. And you have been following the stories very, very closely for CNBC-TV18. Now, let's move on and let's speak about the steel PLI scheme now. The government has once again extended the last day to submit applications for the specialty scheme. The PLI scheme for specialty steel manufacturers can now submit their applications till the 15th of September, making it the third deadline extension since its launch last year. The 6,300 crore rupee scheme aims to incentivize domestic manufacturing of a variety of specialty steel products. The manufacturers of popular anti-flu medicine Dolo 650 have been accused of distributing freebies worth 1,000 crore rupees to doctors for prescribing the tablet to patients. The claim was made by the Federation of Medical and Sales Representatives Association while presenting their argument before the Apex Court. Pharma stocks in India have been coming under pressure in the last few weeks. This after US President Joe Biden signed a law to slash drug prices. Ekta Batra is here with the key factors hurting pharma companies.
Well, yes, it's a down day for frontline Indian generic pharma companies such as Sun Pharma, Dr. Reddy's and Cipla. Now, while analysts and experts can't pinpoint a specific reason for the weakness today, there is a likelihood that the correction is on the back of the US generic stocks such as Teva, Perrigo, as well as Taro correcting overnight in the US markets. Analysts say the market seemed to have been spooked by a settlement on the popular antacid drug Zantac and Zantac generic, or the chemical name ranitidine. Remember, the drug was pulled out of the US in 2020 by the US drug regulators on fears that the drug contains a cancer-causing substance, NDMA. Now, the lawsuit was against some of the manufacturers of the branded and generic versions of Zantac by a 79-year-old man, Joseph Bayer, claiming that the drug, which he bought over the counter and consumed, caused his esophageal cancer. The generic pharma companies such as Teva, Perrigo, Sun, Dr. Reddy's made a combined settlement of over $500,000 with Bayer a week before it went to trial. Now, the settlement amount of the combined 500,000 odd was not that much and will be less than if the case went to trial. But the news has cropped up fears that the other similar lawsuits on ranitidine could result in a liability litigation, which could end up costing billions of dollars to resolve. Also, while litigations on generic drugs is a normal course of business, the fear is the large number of cases for ranitidine. Reports indicate there are currently more than 2,000 lawsuits in the US against manufacturers of ranitidine on allegations of it causing cancer. A US-based brokerage house that wrote on the matter indicated there is substantial uncertainty surrounding the total financial impact of the Zantac litigation. Lastly, the fear is that NDMA has also been found in other drugs in the US, such as sartan drugs, which are used to treat blood pressure, or the extended-release version of commonly used diabetes drug metformin, hence cropping up fears of similar type of litigations on those drugs. Also, the street continues to fear factors such as price pressure and factors such as the US president signing a law to lower prescription drug prices, heightening concerns around the same.
All right, thank you very much, Ekta Batra, for joining us with that special report. We're going to take a short break now, but coming up, the recent hike in minimum support price is not enough, say farmers in Maharashtra's Vidarbha. A ground report when we're back. Welcome back. You're watching India Business Hour. The chairman of the Competition Commission, Ashok Kumar Gupta, has promised faster clearances after proposed changes to the competition law. Speaking to Nisha Poddar, Gupta also added that search and seizure powers can now be used without reference to Companies Act. He also warned that furnishing wrong information will invite penalties.
Search and seizure powers were already available with the Director General. In the existing statutory architecture also, the Director General has been vested with the search and seizure powers, which is deriving from Companies Act. The bill now proposes to make that provision of the Competition Act as self-contained without reference to the Companies Act. I see no reason for any worry on this account.
In June this year, the government hiked the minimum support price for all 14 Kharif crops on average. The hike ranged from 4 to 9%, but when CNBC-TV18 Santya Gora visited Maharashtra's Vidarbha region as part of our What's Ailing Rural India series, farmers told her that the new MSP is not proportionate since it now equals production costs prevailing 3 years ago.
The Narendra Modi government came to power on the promise of doubling farmer income and says one of its key initiatives to this end has been hiking the minimum support price for 23 crops every year. Remember, the minimum support price, as the name suggests, is the least amount farmers can expect when they sell these crops to the government. This year, the government raised the MSP on all 14 crops for Kharif season. The MSP was raised by 4 to 9%. The government claimed that the step was taken to boost farmers' income and to encourage crop diversification. Paddy, tur, moong, cotton and soybean were among those 14 crops. And to find out if the raise was proportionate to the escalated production cost for the farmers, we spoke to the farmers of Amravati, a region known for soybean farming. 37-year-old Manish Bansal is one such farmer. Like he does every year, he has sown soybean on his 4-acre ancestral farm. And going by the latest MSP, he expects 4,300 rupees per quintal of soybean, higher than the 3,900 rupees per quintal last year. But he is not impressed because the new price does not even cover his cost of production.
महंगाई के हिसाब से कम हो रहा है, जैसे कि मजदूर के भाव बढ़े हुए हैं, डीजल के भाव बढ़े हुए हैं, ट्रांसपोर्ट के भाव बढ़े हुए हैं और खाद के भाव बढ़े हुए हैं, वो हिसाब से MSP कम हो रहा है। जैसे कि 1 क्विंटल के हिसाब से 4500 रुपये खर्चा 5000 तक का खर्चा आता है। सरकार का मिल रहा है 4300 रुपये, वो कम मिल रहा है हमें।
It's not just small farmers who are facing the pinch. Even large farmers who have the advantage of scale and access to better technology are also looking at losses despite the MSP hike.
एक्चुअली ये जो कॉस्ट है एमएसपी जो है पर क्विंटल जो है वो 3 साल पहले जो हमारी कॉस्ट थी उसके साथ मैच होती है, मगर आज जो हमारा कॉस्ट ऑफ प्रोडक्शन रेट जो है वो बढ़ चुका है और आज हमें एक क्विंटल के पीछे कम से कम 5,000 रुपये का खर्चा ही है। और जब तक कि हमें 5,500-6,000 6,500 रुपये एमएसपी गवर्नमेंट देंगी नहीं, तब तक के किसानों को ये बिल्कुल लागू नहीं हो सकता है।
Farmers say that the MSP escalation does not take ground realities into account or factor in input shocks like the rise in crude oil prices or the war in Ukraine, which has disrupted supplies. Till last year, a 30-kilogram bag of soybean seeds used to cost 2,200 rupees. Now it costs between 4,000 and 4,500 rupees. Fertilizer costs have also risen sharply. A 50-kilogram bag of DAP or diammonium phosphate fertilizer, which used to cost 1,180 rupees last year, now costs 1,380 rupees. And the slightly less expensive mixed fertilizer costs 1,750 rupees for 50 kilos against 1,150 rupees last year. Prices of the even cheaper 50-kilo bag of potash has more than tripled from 550 rupees to 1,750 rupees. Labor costs have also risen from between 125 and 150 rupees per day per labor to between 200 and 300 rupees per day per person. This grouse over increased cost and insufficient MSP is not specific to soybean farmers.
The MSP declared by the central government for 14 kharif crops leaves much to be desired. Much of it does not even cover the complete cost of production, which is being borne by the farmers of India. It's true not only about soybean in Amravati or some other district, but it is true for all the 14 crops, including paddy, cotton, maize, and many other crops.
The complaint of insufficient minimum support price is not a new one. In 2006, the MS Swaminathan Committee had recommended that MSP be calculated using the more comprehensive formula of overall cost of cultivation plus 50%, where the cost of cultivation includes peripheral costs like rent for farmland and any interest paid by the farmer. However, the government uses a more basic formula that takes into account only direct costs like prices of seeds, fertilizers, fuel, irrigation and unpaid labor. Now in March 2020, the government said that it considers calculations using both formula to arrive at the final MSP and was confident that its MSPs would boost farmer incomes. Farmers, however, say that in reality, this won't happen. In Amravati, with camera person Milind Wagmare, Santiagora.
With that, it's a wrap on this edition of India Business Hour. Thank you for watching. News continues right here on CNBC-TV18.